Hello everyone, this is Progressive speaking. Welcome to my YouTube channel. If you have not subscribed to my YouTube channel, you can press the subscription button and turn on the notification bell to stay tuned whenever I post a new video. So guys, this is our weekly gold analysis. You remember this analysis? It is in my YouTube home screen. It was gold analysis which I did some time ago. Like I said, I used to leave the analysis to see what happens. You understand that gold defaulted my analysis and views in gold market for 2 weeks now. So I was forced to go back to drawing board to cross-check all my analysis to see what is actually going on in gold market and of course why the default. Now when you look at this chart analysis here, you remember that I posted it some weeks now. When you go to my YouTube channel, the video is right in my home screen. You remember I told you that here at this point is the earliest demand area. For a few weeks ago, which the price of gold got to at this area, and then I told you it's going to reverse to retest this very resistance area. Currently it will retested it, and the expectation was that it's going to break this resistance area, but as you can see, the price of gold returned back to this very demand area. Yeah, don't forget it was the reason for this very shape added at this point. The gold price will return back to this resistance area, and what is the next? So the next is gold is going to be resisted a bit at this place, because right now this very shape up here have turned to support area. So it's going to be resisted a bit at this point, but for the fact that it will gotten to almost where the price reversed entirely the previous weeks, there is a tendency for the market to break below this demand area that is currently forming as resistance area. Right now you see that the importance of this particular shape has been exhausted, so I'm going to remove it and take us to the smaller time frame so that you see that what exactly I'm looking for. When you look at the 4 hours time frame, you understand what gold market is doing here. It has been falling with a kind of false signals for uptrend, and sometimes when it is aggressive like this, there is certainly one thing it's going to do. It means there is a closure to a particular trend, and the closure to that trend is what you are seeing here. Remember I told you when the price was at this area, the area of 1913, the previous week, when it formed this W format, I told you that since the 100, 200 and 250 moving averages never crossed, that the price is going to go back for it. And once the price goes above it, when the price is coming down, it will be able to close these 200, 150 and 250 moving averages. So but if for any reason that the price resisted above it, that is going to continue uptrending. Right now you can see what happened. It crossed as expected, got to the resistance area which has turned to support area as expected, and of course pull back, and not just pulling back but pull back at once. And as you can see right now in this place, the 100, 200 and 250 moving averages are closing with full falls. So what is the implication? The implication here is that the price of gold is going to continue bearish. So but before then, there are some things that the gold market is likely to display. So while still in 4 hours time frame, when you insert a trend line, you will understand that the market have gone down as much as it can. And of course, when the market opens next week, there will be a retracement. And that retracement is going to get to about 1947. And it's going to be sharp. So I'm likely to put more confusion on people, hoping that the market will be uptrending. So whenever the market develops dips in up or down trend, expect a sharp move, and that sharp move is going to be very swift. So you should be expecting the price at around 147, and I will show you the reasons. Here at around 147, the reason is because the 4 hours 100, 200 and 250 moving averages has to close, because it's yet to close properly. So there is a market movement that is going to draw it down to continue that downtrend. 2, when you go to 1 hour time frame, you understand that whenever the 100, 200 and 250 moving averages cross nearly, there is certainly going to be a retracement, but not in all cases though, but mostly there is certainly going to be a retracement, and that retracement is going to get to this 250 moving average, even above it, to ensure a strong trend development. Remember, I told you that this 100, 200 and 250 moving averages act as resistance and support area in all the trends. So when you look at this area too, you understand that the 1 hour time frame, whenever, even in any time frame, the 20 moving averages have started figuring itself, like crossing and up and down above itself, then know that there is currently going to be a reversal in that time frame. And of course, in this case, it's not going to be a very sharp reversal. The only reason the market was pushing down is because of the divergence, which I told you that whenever the marker crossed above the oversold or overbought area, but in this case oversold area, that the market is going to start forming a strong trend, and those a strong divergence, and those divergence is going to develop a very powerful divergence. Once it develops, is going to return back and of course continue trending towards that direction. And in this case, you can see here was the first place, it crossed above and then pulled back, came back at this side to form the second divergence, and of course has been forming, going up and down within this area to form this third divergence at this point. So when the market opens next week, the probability to get to 1947 is very strong, and in fact I tell you for sure that it's certainly going to retest 1947 or above 1940. So when you look at the daily time frame, again at this point you see that there is the very strong divergence I told you about, that the first time has been retested, and for the fact that the market was not able to break it at this very 1983 also indicates the possible strong downtrend that is going to bring the price to almost, or if not at 1847 or 1850. But overall, in 1 week time frame, you will also see that this candlestick that closed last week was a very strong long candlestick. So there's going to also be a retracement by it, which is why I told you should expect a retracement around 1940 to 1947, and the market is going to pull down. So, but should these 20 moving averages that crossed above itself cross below this 31st monthly moving average, then you will come to agreement that there is going to be a very strong downtrend. But on the other hand, in 1 week time frame, the market still has the potential of bullishing. But before bullishing, like what I used to say about this the marker indicator, you will see that here at this point it's yet to get to 200 or even 100 oversold area. So there is still tendency that the market is going to be bearishing until this the marker indicator signal line gets to the 200 at least, or at worst the 100 oversold area. Then you'll be sure that the market is going to start bullish. But for now, having rejected all the movement or expectation in daily time frame, so I'm coming down to the same point where it reversed at this very demand area. So the tendency is it's only going to do the retracement to about 1940 or above that, and then continue to pull down, maybe probably to this 1850. So by the time the market opens next week on the 1 hour time frame, what you should be expecting is something like this very movement. It is going to certainly retrace up, and of course probably going to continue bearishing because of this very 100, 200 and 250 moving averages that have properly crossed on 1 hour time frame. Do not forget, this very moving averages that is the 100, 200 and 250 moving averages, forms as the resistance area in the market, and whenever it crossed to either down or uptrend, it used to be very difficult for it to cross again. It has to take a very strong trend to force it to cross, and once it crosses, it takes time, except if it is a kind of swipe that forced it to cross. Is going to retrace back immediately, but in this case it took time to cross below itself. And when you look at the 4 hours time frame, similar thing is about to happen here. So when the market opens, if you still have a buy options, once it goes up, endeavor to close and watch the market movement, because there is tendency for the market to bearish, and it also has tendency to continue bullishing at this point. But for this particular rejection on daily time frame, coming back to retest almost exactly this very demand area, which I have shown to you here. So the next target is at this area, about 1840 or thereabout. Should it finally breaks this very 1900, if I may say, resistance area. So guys, that is what to expect in the market this coming week or in the future time from now. Bye for now.